Hello students, welcome to my YouTube channel Sun Academy. I am Naresh Sir. Today we are going to solve a question of alteration of share capital, that means redemption of preference share in financial accounts for F.Y.B. As the given question is balance sheet of Rama Chemicals Limited is as follows on 31st March 21. Under the heading of equity liabilities, shareholders fund share capital is 5 crore 80 lakh, reserves 1 crore 20 lakh, while trade payables 1 crore. Under the heading of assets, non-current tangible assets are 4 crore 85 lakh, current investment 70 lakh, inventory 1 crore, trade receivable 90 lakh, and cash equivalent 55 lakh. Further is given that company wants to redeem its preference shares at 10% premium, and for that company will issue necessary equity shares of 100 each. Cash balance of 80 lakh is to be maintained. Investment was sold at 1 crore. Amount was paid to preference shareholders. Write journal and prepare balance sheet. Under the note 1, share capital shows 4 lakh equity shares of 100 each, 1 lakh preference share of 100 each 80 paid, and 1 lakh preference share of 100 each fully paid. Note 2 shows reserve security premium 10 lakh, journal reserve 75 lakh, profit and loss account 35 lakh, while non-current tangible assets shows land 2 crore, building 1 crore 85 lakh, and plant 1 crore, total of 4 crore 85 lakh. Now students, first we will write journal. As you saw in the balance sheet, one of preferential capital was partly paid up, and first of all call of that will be called, and that was on 1 lakh shares, call of rupees 20 is outstanding on 8% preference shares. So first bank account debit, that will be 20 rupees on 1 lakh shares, so that will be 20 lakh. So that was 8% preference share capital, 8% preference share call account, being call was made. Simple. Now this amount will be received by the company, so entry for transferring to capital will be 8% preference share call account debit 20 lakh to preference share capital account. Paying amount was transferred to capital account. Then after these two type of preference share capital account will be debited. One is 1 crore and other was 80, on which call of 20 lakh has been received. First let's do entry for that in the cash account. Balance be the first opening balance of cash, that showed 55 lakh to 8% preference share call account 20 lakh. Now both kind of preference share capital will be debited, premium will be debited, and that amount will be transferred to shareholders account. preference shareholders account, 8% preference share capital account debit 1 crore, 6% preference share capital account debit 1 crore, premium on redemption of preference share account debit, premium was to be paid 10%, so that will be 20 lakh. To preference share holders account 2 crore 20 lakh, being both types of preference share capital was transferred. Now there is a rule. It has been said that company will issue necessary or what is said necessary amount of equity shares. Now for that, first of all we will have to tally the cash and bank account. From there we will be able to find the amount of number of shares which are to be issued by the company. Now that is to be written on the credit side by 8% preference share capital account, ₹1 crore by 6% preference share capital account, ₹1 crore by premium on redemption of preference share, that is 20 lakh, and closing balance has been said to be maintained 80 lakh. So by balance CD $80 lakh, and this will be the total 3 crore. Now opening balance is given, call has been made, then after first entry will be done of investment. Investment are sold at 1 crore. So bank account debit 1 crore, investment were of 70 lakhs, so there will be profits to investment account 70 lakhs and balance amount will be transferred to profit and loss account. And that will be 30 lakh, being investments were sold. Next will be that has to be amount written on the debit side of the cash account to investment account, ₹1 crore. This amount was 3 crore minus 75 lakh minus 1 crore. So new issue is to be made of 1 crore 25 lakh to equity share capital account 1 crore 25 lakh, and here the cash account tallies. Entry for that will be bank account debit 1 crore 25 lakh to equity share capital account 1 crore 25 lakh being new equity shares issued at par. Now we should create a capital redemption reserve because capital is being redeemed 2 lakh while new capital enters 1 crore 25 lakh. So for the balance amount, company must create capital redemption reserve account from general reserve, and if balance is short, the short amount will be taken from profit and loss account. First, let's pay 2 crore 20 lakh to preference shareholders, and entry for that will be 2 crore 20 lakh to bank account being amount paid to preference shareholders. Now, capital redemption reserve account is to be created for the amount of 75 lakh. Now, general reserve is 75 lakh, so whole will be transferred to capital redemption reserve account. So capital redemption reserve account 75 lakh paying capital redemption reserve account 18. Then after one more account is to be closed, and that is premium on redemption of preference share, and for that company will use the amount of security premium account. Security premium is only of 10 lakh, so the balance amount will be taken from profit and loss account. Both 10 lakh will be debited securities premium account and profit and loss account to premium on redemption of preference shares account being premium on redemption of preference share account written off. Now we will have to prepare its balance sheet and its note. So let's create the space for that. Now if we prepare the balance sheet, ago share capital was of 4 lakh, then after new equity share of 4 crore, then after new equity shares of 1 crore 25 lakh were issued. So total of share capital will be 5 crore 25 lakh. Now comes the number of reserves. Ago there was security premium which was totally written off, general reserve which was also written off, profit and loss account was 35 lakh, and profit was earned on the sale of investment, that was 30 lakh. So 35 lakh plus 30 lakh, 65 lakh, out of which profit of 10 lakh was used to write off the premium on redemption of preference shares. So the balance will remain of 55 lakh, and another reserve was capital redemption reserve which was created, and that was 75 lakh. So reserves will be 1 crore 30 lakh. Under current liabilities there was trade payables, and nothing was done to that figure, and trade payables were of 1 crore. Now assets, non-current tangible, and that were 4 crore 85 lakh. Investments were sold. Under current assets, inventory, that figure is to be written as it is because nothing was done to stock, and that is 1 crore. Trade receivables, that will also be the same. ₹90 lakh. Then after cash and cash bank, that was to be maintained 80 lakh. Now if we total it, that will be 7 crore 55 lakh, and this will also be 485 plus 100 plus 170, 7 crore 55 lakh. Now note number 1, equity share capital, and that is 5 crore 25 lakh. That means 5,25,000 equity shares of ₹100 each. Preference shares were already redeemed. Note number 2, tangible fixed assets, which included, that will be written as it is, as in the question was, land 2 crore, building 1 crore 85 lakh, and plant, that was 1 crore. So 4 crore. Note 3, which should be actually note 2 of reserves and profit and loss account, that was 50. 5 lakh and capital redemption reserve, which was created out of general reserve, and that is total of 1 crore 30 lakh. Now this was the sum of redemption of preference share. Next lecture we will attend a little bit more tough questions. So if you want to learn, do follow. If you still haven't subscribed, do subscribe. You should have noticed one thing: when I do some, I look serious because it is my nature. When I do work or attempt anything, I remain serious on. Now, if you haven't shared any link of my videos, it is advisable you should show that other students also learn very good questions which are out of the books.